Welcome back. Well, let's focus on Jindal Stainless. Then the company reported actually a good set of numbers. It was a little bit better than what the street was working with because in spite of realizations being a little bit weak, that's where the stock started off in the red, but it's recovered considerably. To understand what's the way ahead, Mr. Anurag Mantri, who is the Executive Director and the Group CFO, joins us on the show. Hi, Mr. Mantri. Thanks a lot for speaking to us here on CNBC-TV18. Let's get the two big numbers out of the way. Now, in the first quarter, the volume growth is around 5%. Earlier, you were guiding, I think, for around a 20% volume growth. So do you stick to that? Point number one. Point number two is on the EBITDA per ton. There has been an improvement on a sequential basis, and you had hinted about that as well. But from around 17,000, do we see it move to around 20,000, which you were doing earlier?
So thanks, Nigel. So on the volume growth side, 5%, you are right that. But if you see, we did a best ever sales, highest ever sales in this quarter. So overall, the volume we are seeing because domestic demand has continued to be strong, and especially in the New York sector, we are seeing a good demand traction. With this, we are expecting that we should be able to achieve the almost 20% of the volume growth in this financial year. This is just a quarter because and it will also depend on how the export market unfolds at the end of the year, which is H2, which we were expecting. But overall, at this moment, we are okay with the guidance of around 20% of the volume growth for the full year. We are seeing a good traction. If you see, the volume sequentially have increased in this quarter. On your second question was on in terms of the EBITDA per ton, right? Now, EBITDA per ton, there's obviously last quarter was we have seen obviously the improvement because if you see quarter 4 was more an exception, I would say, because of consistent fall in the nickel for 9 months, and just preceding the 3 months, it was the sharp fall, which had some of the value inventory valuation adjustment as well as the sentimental demand adjustment played in the Q4. So we are now recovering from that, and we have done the EBITDA per ton, which because with our, as I keep saying, is that our mix has been very agile, and we take almost 30 to 45 days to adjust to that, and we are seeing that recovery in Q1. So with this, we are now on our guidance for the year is 18 to 20. So I would stick to our guidance that we are expecting 18 to 20,000. Now moving toward 20,000 will all depend how the export market unfolds in H2. Right. But I think the guidance we are sticking 18 to 20,000 at this stage.
So let's talk about the export market itself and the JUSL EBITDA. On exports, it's down from what, 17% to about 10%. Mr. Mantri, where does it end at the end of this year? That's point number one. And secondly, an EBITDA driver could also be, how JUSL performs. So what's the guidance for that this year?
Yeah, so Mangalam export, you are right that we are facing obviously challenges in export because of two reasons. One is because demand is also subdued as compared to the earlier one in US and our key market, which are the two key markets, which are US and Europe. And second is that the Red Sea issue has actually further made it unviable in terms of the very high freight cost, because the freight costs have increased almost 3 to 5 times because of the Red Sea crisis, and the timing has also increased by 3 times. So which has actually taken not much of the export viability at this stage. But we are expecting the Europe is showing some of the uptake and US probably may be showing we expect that post US election, we should see some of the uptake in at least at the end of the quarter 3 and quarter 4 onwards. With this, we are saying that our export that we should be able to do 10 to 15%. Currently, if you ask me current scenario, I think 10 to 12% looks more feasible. But I think we expect that export should improve in especially in H2, both from US and Europe, and this Red Sea crisis should also come under control. The freight cost and the container availability also sorted out. If that happens, I think 10 to 15% we should be able to target our export mix.
On JUSL
EBITDA, you asked me about JUSL EBITDA. What is your question on JUSL EBITDA?
Yeah, what is the absolute EBITDA?
So absolute EBITDA in this quarter of JUSL was 171 crore, and this had some of the exception item in this quarter of around 15 crore. Normalized level, I think you can say, so normalized EBITDA was around 185 plus crore on this quarter.
So you annualize it, it will be closer to 750 crores for the year?
Yeah.
Or more. I think you were hinting earlier it should be closer to 800 crores, right?
Yeah, so 750 to 800 crores should be the EBITDA for this quarter. There was obviously, as you rightly said, is that because it all depends on how the volumes unfolds and in terms of the tolling charges, because it's a job work for Jindal Stainless.
Yeah.
So some
Okay.
of the, because now based on the certain volume, there was a certain discount which accrued to Jindal Stainless also.
All right, Mr. Mantri, final question before we let you go. You'll have taken an enabling resolution to go ahead and raise some equity. Is it just an enabling resolution, or given the way the stock price has moved, if I'm not mistaken, in the last 2.5 years, it's moved from around 200 to around 800 rupees. And the promoter entity has come there and they've shown their faith in buying from the open market. Is this an enabling resolution, or should we look at an equity raise from Jindal Stainless in the coming quarter?
So Nigel, I think it's currently an enabling resolution, and as we said that, as I mentioned, that domestic demand is growing very in a strong pace, and especially in the newer sector, and we see a good organic and inorganic opportunity. So we need to get ready for ourselves for the future. So we have taken an enabling resolution, and depending on the opportunities, we will see that. But we need to be ready for, because we see stainless steel growth continue to be on a stronger side in the domestic market, and export market should also open up. So we should be ready with our balance sheet, because our focus is actually a prudent balance sheet ratios. So keeping that in mind, we have board has approved an enabling resolution.
Take that point. Thank you so much. We will, monitor the developments out here as they come along and, hold you on to the guidance that you've given us for this year. Always a pleasure speaking with you, Mr. Mantri. Meanwhile, there are